and we'll see how that goes. Why is this? What's going on? Hold on. Yeah, okay, it already did go through. Sweet. Stop loss didn't move though, so I'm just going to put it here. We've only got 66, well, actually 84 pounds on the line. No big ball of stuff yet. So yeah, we'll just see how this one goes. Anyway, guys, Chris is here to take over the show. So I will love you and leave you all. Thank you for being here. Chris, if you're watching, just a fair warning, there's some idiots in the chat. But yeah, guys, don't get margin called. I will see you tomorrow, I think. Have a great day. See you later.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Looking for some directional flows to the upside today. We have no major U.S. news. We had our unemployment claims come in this morning. Bank of England did cut rates by 25 basis points. We had a 0 to 9 on the Monetary Policy Committee. Unemployment claims came in slightly higher. Prelim for non-farm. I mean, really, non-farm is a big event tomorrow. About 60% of our week is Thursdays and Fridays highs for the week. So I would imagine that if today is going to be pushing up towards highs, tomorrow is either like the poke to those highs and then a fall, or non-farm continues to deliver like a higher high if the numbers come in solid. But no major news coming out for later this morning other than, I mean, that's low impact, but natural gas storage, if that even matters. Otherwise, I'm looking for the flows to continue to kind of grind up towards, and it may be today, tomorrow, but I'm looking for the flows to be relatively stable and positive towards 6,100 on the SPX and the 610 handle or so on the SPY. So this level is continuing to swell for the morning. And I'm just in a couple of bull put spreads here below the like 60-30 zone on SPX and essentially staying below like 600 on SPY. But I'm going to see if we can get up to 610 or so either today, tomorrow. Same thing on SPX. If we can just stay relatively calm and chill today and maybe make a late afternoon push or even late morning, this is fine. Like late morning push towards like 6,100, and we'll see what happens. So I'm just sitting on a couple of those trades. Overnight, we had some earnings. Let me grab my earnings look. So overnight, we had Ford, Qualcomm, ARM, Symbotic, O'Reilly, Aflac. This morning, we had Eli Lilly, Roblox, ConocoPhillips, Peloton, Hershey, Bristol Myers Squibb, Yum Brands, Philip Morris International. After close today, we've got Amazon. So talking through some earnings today. Ford took another hit to the downside, which I'm not sure if they missed on earnings. They didn't, but apparently stock market doesn't like it too much. Qualcomm actually had positive guidance, and we had earnings top and bottom were beat. We had a gap lower towards like 165, and it's now back to 169. I think I took a I thought I took this on both sides of the trade. Let me find out here. I think I took a trade on Qualcomm. This one might be out to next week, though. Yeah, so I'm looking for a move down below 160 or move back above 182, and I've got this out to next Friday. So that's the earnings play for next week. O'Reilly, I don't think had a huge move. This stock is surprisingly bullish. I mean, it's a $1,300 stock, which is kind of nuts. We did have earnings. They missed on EPS, but beat on revenue and a little, flash low. I mean, I don't want to call the top here, but I can't believe this stock hasn't split at $1,300. We'll see. Anyway, that's O'Reilly. What else? Aflac. Surprising move to the downside on Aflac. We were at 107. Now it's only down to 103. It's not a huge mover. but curious if this is dragging like Progressive or Chubb or any of those other insurance companies down, and it's not. So that's Procter Gamble, my bad. PGR is Progressive. PGR still came back off that little, the California wildfires, LA area, like that was the big scare on insurance, and they bounced back really nicely. CB, same thing, bounced back really nicely. I've got some ratio spreads on those. Those to me are looking pretty good. Going into the morning, Eli Lilly had earnings today. Move was somewhat quiet. I mean, we had it's only moved up about $17, which even for like a small percentage, I think I was only looking for like a 5 or 6% move, and I don't even think it gave us that yet. So I'm glad I didn't force a trade on Eli Lilly. Roblox had a big gap. Wow, that's a big fat gap to the downside. For a $75 stock, gap down $10 or $11. That's a pretty big move. I tried to price that one in. I just didn't get the trade that I wanted. I didn't take it, but nice to see some direction. COP, pretty quiet move. Peloton, what do you do with an $8 move? Nothing. Or an $8 stock. I just would stay the heck away from it forever. Peloton was a fun COVID trade, and that's about it. Hershey, 152. Down below a 5-period yearly moving average. Looking at let me go to the daily chart here. Hershey, if we come back into like COVID lows, I'm probably interested in looking at something there. Let me see the Ivy rank on Hershey. 50, about 50, 49.9. Probably not enough IV to say, yeah, I bet the premiums aren't that great. If I looked at like a COVID level, like 110, probably nothing here that I want to really trade, but let's find out. 43 to 50 days. Yeah, those bid prices don't even fill in on the put side, so never mind. Bristol Myers Squibb, that's BMY. Big indecision level. This one I'm interested in maybe doing some trades on if we come down to the low 40s. Until then, I'll wait. Yum Brands had a nice pop to the upside. People be loving their KFC and A&W and whatever else Yum Brands has. What else is Yum Brands responsible for? Is it Taco Bell? Oh yeah, people love the Taco Bell pizza. Is it Pizza Hut? I don't know. It's KFC, Pizza Hut, or KFC, Taco Bell for sure. There we go. Shines after Q4 earnings beat, fueled by Taco Bell and KFC growth engines. Why go to the grocery store? You can just get food that makes you have diarrhea. Anyway, Amazon earnings aftermarket today. I've got an earnings play in. I've done some rolls on the covered calls that I have. So Amazon hopefully is a decent, exciting move out to next week. Then we have some ELF. I think that's for cosmetics. That's been down. Let's see here. Affirm, Microchip, Pinterest, Powell. That's pretty much wrapping up my week for earnings. So that's earnings for now. All these yellow boxes I have some exposure in. Next week, I have some trades that I'm looking at taking as well. Shopify, Zillow, perhaps, depends on how it prices out. Cisco, MGM, Wynn Casinos, Palo Alto, DraftKings, Coinbase, Airbnb, Alibaba. Looking for some earnings action there. Okay, let's go to the top. We had a slight gap up. We're fractionally higher this morning. SPY is up 0.13%. Equal weight, bit of a nothing burger. Let me go to the daily time frame here. So just hanging out. Non-farm again tomorrow. Futures market today. This is one thing I'm looking at in the futures market. Right now, my ES feed and my NQ, so ES for S&P and NQ for Nasdaq, as long as we are staying above this trend line, okay, this trend line here, so support, let me change the color. As long as we have support in here, then this market is hopefully going to continue to grind higher. My concern is that we have this recent high, if we turn south, then futures-wise, I may be looking at a futures trade to the downside. Okay, so I could see today being sideways just because the big event is tomorrow. So is tomorrow going to be, upside move, or is it going to break structure and break the trend line? Futures might be pretty quiet today and tomorrow going into non-farm payroll, and then that's the major catalyst for the weekend, Friday into next week. Okay. So anyway, as long as this trend line remains intact, I'm still, mildly bullish / cautiously bullish on the markets right now. Is this, the deep seek was pretty much a gap fill. So here's your, was this deep seek? Yeah, that was the Sunday night futures deep seek move that then Monday through Thursday, Friday, the entire week was there's your deep seek low. Market spent the whole week pulling back, and then we have our tariff talk. We gap lower for tariffs. We spent the entire week pulling back. So that's what I see. It's like we're either just hanging out here, just clawing the, fighting the good fight, climbing the wall of worry type thing, but we might struggle to get to all-time highs or make any convincing break above them. Okay, there's a lot of indecision today, which I think it's fine with non-farm coming out tomorrow. Yeah, that's kind of about it. And then looking at the more intermediate trend line there, same type of thing. Just waiting to see how price goes. We'll go Qs up 0.2%, equal weight up 0.18. The Dow's red today, Russell's up fractionally. VIX 1 day is actually down. VIX has been down. So the last, 4 days? Other than Monday's open, VIX has been down every day. SVXY kind of staying steady in the middle. Dollar index, a little bit stronger on the day. Oil, 71.18. Oil futures, 71.22. Natural gas up a little bit. This helps my UNG position. I think I'm up a few bucks on that one right now. UNG. What's the overall position here? UNG overall. Up around $1,200. So this is not like a time sensitive trade. I'm looking to see if natural gas is getting into this buy zone on the daily time frame, if this is enough to stay above the buy zone, start to see higher lows and higher highs. And I've got an income trade to the like $23 and $24 mark. Okay. Arthur, I'm doing well. How are you? Gold. Everyone's favorite. Pile in on gold. Okay. Why am I not buying gold? I showed yesterday in my charts, we have a lot of hidden bearish divergence. I'm not calling the top on gold. I'm not shorting gold, but I'm just waiting for some type of pullback or dip. And that pullback or dip could be subtle. It could be a pullback to the previous all-time high. It could be a pullback into any of these dynamic moving averages. But the bar count that I'm interested in is I think we're at 300 plus bars, maybe more on gold. So let me check that really quickly here. Last time we tested the moving average was October 2023, and that puts me up to around 338 bars, which is comparable to what you have in the S&P. So anyway, I'm just going to be patient, waiting for some type of pullback, some type of pause. If it's a subtle pullback there, that's fine. Resistance becomes support. Maybe there's bid. Pulls back into, this is a 21, 50, 100, 144, 200 moving average. Any of those pullbacks, I'm looking for a close below, close above to reestablish longs. Not terribly difficult, just probably the hardest part is being patient. Gold futures, same thing. If I get some pullbacks into here, I would be happy to put on some gold futures trades, but I need some pullbacks first. GLD, I've got some credit spreads. I've got some shares. I'm just enjoying this run like everyone else. I'm just not heavy in gold. Silver, a little bit of a pullback. These recent highs at 32.57. I think silver still looks good to the upside towards $36. Silver futures, this one looks good. I had a trade from Q4 that closed out early January. Same thing, like just kind of out of the way, closed out for about 560 bucks. SLV, if we have any dips or pullbacks, credit spreads, I've got some diagonal spreads running as well. My target's up here towards like $33 to $35. Bitcoin, still a lot of volatility, not making really convincing direction either way. I could see Bitcoin going sideways for a little bit. We had a long accumulation phase in Bitcoin last year before we had that kind of pre-election run. And then, of course, election went nuts. But we could do something pretty similar where I would want to be careful on Bitcoin for this, though. If this is some type of resistance that potentially could be a double top, if we break below 90 convincingly, then we might be, this resistance, measure that move. There's your measure move. And then we find some efficiency down here. But this is why I keep saying like the 90K, to 80K. I still like adding and adding. Longer term, I like adding to Bitcoin. I just want to see some pullbacks. So all your, exposure / correlations, IBIT pulling back a little bit. I have some credit spreads in here. I'm looking to see, if we pull back towards like $50 again, I'll probably add some more credit spreads in on IBIT. If we get a gap fill, I will certainly be adding some credit spreads in this $46 to $43 zone. MicroStrategy had earnings in awesome fashion. They just continue to miss like crazy on earnings, but nobody gives a crap because it's not really trading like a tech company. It's trading like Bitcoin. So there's clearly some resiliency here, even though they had a miss in revenue and a miss in earnings. But yet they're like, well, they do have, 130,000 Bitcoin. So that's good, right? So the market just treats it like it's Bitcoin. Leverage Bitcoin, but it's still treated like Bitcoin. So there's resiliency baked into this. I'm looking at an income trade. Hopefully it stays above 310. If it doesn't, my break even is 279, so I can continue to sell premium. But hopefully it just stays where it is, doesn't have any crazy flush lower, and I'll get called away for about $30 a share, $31 a share. Coinbase, we have earnings on Coinbase coming out next week, I believe, on Thursday. That'll be something I'll be watching. Ethereum got hit pretty hard over the weekend, and I'm glad that I'm out of Ethereum for right now. Japanese yen, I'm liking this a lot, actually. So my 6J is my Japanese yen futures. And I saw somebody on one of my YouTube video comments was like, this guy's crazy. Don't ever listen to him. He says he's not going to trade the Japanese yen, then he trades the Japanese yen. Oh my gosh, call me a trader. What I said is I'm not going to trade FOREX for the Japanese yen, but I would be willing to trade the futures market because it's way easier to trade. I can go out in time. I can have defined risks. So the Japanese yen can do the dumbest things and I can still have a line in the sand. And so I'm long with a bull call spread on Japanese yen futures. And I'm currently up around $1,900, almost $2,000. And hopefully more to come. I mean, I've got this on a little bit of exposure for almost all my accounts here that can trade futures, which I think is like all but one. I have one like pure cash account. The other ones, even with IRAs, I can trade futures. So there's time in the trade, but point is, if we are going to actually make a break for the buy zone or get back to this recent high, I wonder if we're actually building in some type of bullish pattern. Okay, so I'm out to September on this trade. It's not really time sensitive. So my 6J is not super time sensitive, although it is September, so it's limited to how far out I go. But FXY, I actually own shares, and I bought shares around $58. And I'm still going to keep those shares because I think that this is probably the easiest way for me to have some Japanese yen exposure. And if we see a big move on the Japanese yen this year or next year, then even taking this from like 60 to 68 or 60 to 70, I'm still happy to make some bucks on that. Okay, so I think I have a few hundred shares of FXY. Let me see. So FXY right here. So 1, 2, 3, 4, I have 450 shares. So if I get a move from, so I own it around 58. I think that's my break even. Yeah, 58.62. So let's just say I get out around $70. Okay, so $70 minus 58.62 is 11.38 a share, 450 shares. So I'll make $5,000 on FXY. Just a bit of a, it's not really a hedge. It's just, I think there's going to be some Japanese yen strength. I think at some point we have either more intervention, more Japanese yen drama, something breaks, market goes into a risk-off tone, and the Japanese yen gets really strong. But the one thing that's also helping kind of aid this is the Bank of Japan is not making it nearly as attractive to hold in like negative carry, right? So they've gone from negative 0.1% to 0 to 0.25 to 0.5. They keep raising rates, and I don't know if they're going to keep raising rates. I think they're going to still be somewhat accommodative to keep this market resiliency. But if they go to, 0.75 or 1%, that makes this carry trade way less attractive. And similar to what we saw back in July of last year, it is very possible that when the deleveraging happened last year, that was what it looked like. So another wave of that could happen very, very quickly. And that is why we saw pretty much every yen pair drop a ton, right? And we're still wondering, like, is this Japanese yen going to get stronger? I don't know. I still think that the dollar yen could do something like this, where we have high, to high, to high, to high, and it gets back to the same high again, and then this structure breaks, that would be more like a range trade that I would get my Forex accounts behind. Okay, but that if it's either that type of like, slow build to the tops again, and then we're talking about more intervention, which is so difficult to trade. That's why I said I'd rather own FXY and trade Japanese yen futures, because it's so hard to be a Forex trader when you don't know if the Bank of Japan has to intervene in your favor or not, right? I'm so surprised over the last couple of years that an intervention didn't look like a 500,000 or 500 pip flash crash to the upside and then it dumped. I mean, consider yourselves lucky, because usually a flash crash move is not going in the direction that's counter trend. Usually, flash crash move is what flushes out everybody and then reverses. So anyway, I don't. Either this market keeps grinding higher until that structure breaks, or we are going to work our way down into this low and then have some type of head and shoulders pattern that maybe pushes us to fresh lows here. That'd be the head and shoulders pattern. So I'm watching the setup, but meanwhile, I'm going to stay. Like I said, I'm going to stay with my Japanese yen futures position and my FXY. That to me is the easier way to trade it with a lot less funny business. No, somebody said it. It was a comment, and again, it's probably like forex pricing or whoever some guy that I lost it on one time where he was just like, you're an idiot. And I'm just like, no, you're an idiot. No, it was in my YouTube comments where he just said something like, don't listen to everything he says, take it with a grain of salt. I'm like, okay, I guess you didn't listen, because I just said I don't want to trade Forex. I just think it's ridiculous to think that traders know what a Japanese yen intervention is and when it's going to happen, and relying on the Bank of Japan to get you on the right side of the trade, when I'm like, I don't have to pay any negative swap or any negative rollover by holding a Japanese futures position that is a defined risk options trade, or trade FXY, which is owning a share that I pay nothing on other than if price goes up, I make money. That to me is a no-brainer. That's so much easier than trading Forex for Japanese yen. So anyway, just thought it was funny. All right, let me check in a couple of trades this morning real quick. I've got some SPX trades running. I'm just watching price on my other side here. So the dollar's down to 70 cents. News at 10:39, nothing crazy. Like, what the heck's going on? There's just a lot of back and forth price action today. All right, let me take a quick peek at futures. Okay, futures is starting to dip just a little bit. I mean, we're not breaking the trend line or anything. I'm just going to keep an eye on this. A little bit of a gap fill this morning. Let's see what happens. Flow wise, let me check my SPY this morning, see if that continues to swell towards the 610 handle. Okay, a little bit lighter. Yeah, we just have a lot of indecision so far today. See if we can get back to like the 605, 606 level. All right, let's keep going. So that's Japanese yen. The DAX, you've got to be kidding me, man. We're at fresh all-time highs in the DAX. This index cannot be stopped. It's impressive. I hope nobody's trying to short this thing. I don't know why the German DAX is doing as well as it is. It is outperforming the S&P. I mean, since this dip we had in August, I'm pretty sure this has performed better. So that's up 28% since the August dip. Let me check the SPY. 28% in the DAX and about 18%. Wow, that's a pretty impressive outperformance. 28% in the DAX and 18% in the S&P. So it keeps rocking and rolling. The FTSE also up to fresh all-time highs. I don't know if that's because the BOE just cut rates this morning. Marcus seems to like it. Yep, nicely. I like it. Ride that thing. Argentina, sideways. I'd like to see some dips or pullbacks, or these moving averages catch up to give me more dynamic level to buy support. Just going to wait on that for right now. China, a little bit up on the day, 0.05, nothing crazy. Here's Brazil, looking better. I own some shares of EWZ. Apple, still fighting the good fight, bounced off the 200 moving average. I sold some premium on that with some ratio spreads. Amazon has earnings tomorrow. We're going to blow through earnings, maybe get up to 250 to 260. Or if we miss earnings, we could have a aggressive move lower towards 222. Google, big drop yesterday. Even though they had a slight miss in revenue, they beat EPS. It's not really a big enough pullback for me to say I'm going to buy Google or do anything with it. I wouldn't mind, adding in some exposure there at 190. But if I were to buy it here, I would have to be willing to take it down to probably 175 and down to like 150 as well, realistically. Um, do I love that? I mean, if I bought Google at a 9% discount, could be could be fine. If I bought some here and bought some at a, let's say, 18% discount, could also be fine. The concern, of course, would be that we don't keep going higher. I mean, longer term, sure, I'm sure Google's probably fine longer term, probably totally fine longer term. Um, but I didn't really want to mess around with the ratio spreads. I got a bunch of those already scheduled out. When we had these lows, I started putting in like there's March, there's May, there's December. I mean, I'm like literally doing like option leaps, defined risk trades on. Well, it's actually not defined risk. It's more like I'm willing to own the shares with ratio spread. So I put in levels that I'm interested in owning some shares. I'm just trying to think: are we going to get to all time highs again? Yes, no, maybe. I'm not really sure. So do I love Google? Eh, I mean, it's of the Mag Sevens, it's actually like the cheapest one, because of the split they had back here, right, where we had the 20-for-1 split. I mean, it did make Google pretty attractive. So we went from that 20-to-1 split around this price point. It was trading around, let's say, I don't know, $2,000 or something if it was a 20-for-1 split, and I was trading at 190. So the stock price has still appreciated quite a bit since the split. It's up around 80%. Again, not bad. But question remains. So here's the deal. If I put in $1,000 on Google right now, I've got to be willing to throw in probably another thousand in here. So if I put like a 3K position in, that's not a big allocation. That's probably less than 1% for some of my accounts. But 1% of Google with potential gains above. I mean, I think if you give this stock 5 to 10 years, we're probably talking another stock that's up to $500 to $1,000. You just have to give it time. Okay, so do I mind it? No. If we're still talking AI and capex spending, um, I mean it should be okay. I don't know who's winning the arms race right now. I'd say Meta's probably the one that's like getting the most street cred for like how much they're positioned for AI gains, and they're just a freaking cash cow. Even though they lose money in their metaverse, like billions of dollars, they still make so much money. It's ridiculous. Microsoft. I mean, if Microsoft wasn't so darn expensive, I think Microsoft is a better technical position than Google, but Google is just cheaper. So I don't mind Google. I think the only real issue would be like government probes and antitrust, and I don't know. I mean, do people use DuckDuckGo now instead of Google? Is anybody still using Ask Jeeves? So, I mean, I just watched a movie last night. It's like everything when it's like people on the computer in a movie, a little segment in the movie, it's always going to Google. Is that product placement? I don't know. Anyway, I don't mind it. It's about a 9% discount. So do we hit fresh highs on Google this year? Yes, no, maybe. I think we can get back up here. If we put $1,000 into it, I make a whopping $80, right? Like not a huge return. So it's not like I'm making money hand over fist. I mean, option trades is going to help me make a lot more money. I just don't like the prices that it's at. So this would be more like stash it away, throw some dollar cost average positions into it. And again, I don't know if Google's better positioned, maybe Microsoft. It might be easier if I just do this discount. Microsoft going up 12% maybe looks a little bit better with all my ratio spreads out here. So I'm going to do this. I'll give them both a chance to run. I'm gonna throw $1,000 into Microsoft at current prices, and I will throw in $1,000 on Google at current prices. That's more just like stash it away type move. Nvidia looking better, right? Where we've got some gaps to the upside. We're still just chopping around this 200 moving average. I still think there's a gap fill potential. We've got earnings out towards the end of the month. I do have an iron condor, which is still looking pretty good actually, even though it's a bit volatile. But if we get back into the center price, that one's looking okay. All right, let me keep an eye on SPX this morning. Okay, don't fill that gap too aggressively there, SPX. Futures market. So we've got S&P making some fresh lows. NQ making some fresh lows. Come on, just give me some chop suey today. That's all I want. All right, anyway, let's see. Google and Microsoft. Throw in $1,000 on each. So it's not going to buy me a ton of shares. It's not really, it's more just the dollar allocation. So if I do $1,000 at 416, I'm buying essentially 2 shares. So I'll buy 2 or 3 shares to kind of start off. So what's 1,000 divided by 416? Buying 2.4 shares. I'll buy 3 shares. So Microsoft, I'll buy 3 shares. So long the stock, 3 shares is going to set me back about $12.50. Okay. So let's get some action there. So 3 shares filled. Taking the 3 shares on all accounts. Okay, just give me a second to get these all filled. All right, so just did an allocation there around 416. I'd say I'll just put the break even and let me look at all of them here. So anywhere between like 416.69, 416.60, 416.57. I'll take the high end of that, so I'll just go 416.69 for $1,000 allocation. Add that into the Pulver alerts. That will be a little dollar cost average position. So new trade, Microsoft, 1250 allocation at 416.69. Small percent allocation to own. Looking for MSFT to revisit all-time highs in 2025, 2026. I'll continue to monitor, and I'm willing to dollar cost average in at lower levels. Okay, lower levels, that would include, I mean, I would say the next level for me would be like 340. That would be a pretty hefty discount. If we went all the way down there, that's about a 30% off trade, which for this stock, I wouldn't mind at all. I'd say 330. Lower levels, 330. 330 to 350 would be my next zone. If we get back to all-time highs from current price, get back to all-time highs, we're looking at about a 12.5% run. 12.5% move up, revisits all-time highs. Okay, that trades in. So that is a 1250 allocation at 416.69. Okay, and then on Google, so this one's sitting off all-time highs with that quantum computing stuff. Again, I'll probably put 1,000 on this one. So 1,000 here, a gap fill and a revisit of these lows, that would be area 3. So 1, 2, and 3. The nice thing here is I can put in these levels for 1,000 each. So I could go 1,000, 1,000, 1,000, and that would be roughly current price. And then this would be around 160 or so, 176. I'll put 176. So we'll put 191, 176, and then a low at 150. 150. So 191, 176, and 150. Okay, so I'm going to start off with another $1,000 allocation. So about 5 shares on Google. Okay, so 5 shares. Everyone getting in on the action. Just give me a moment to get through these. Come on. Let's go 75 maybe. 190.7071. All right, just fill my order. There we go. Okay. And there. There. All right, 190.71. $1,000 allocation at 190.71. Small percent allocation to own. Looking for Google. To revisit all-time highs or offer additional dollar cost average levels. Level 2 at 176, level 3 at 150. And those will be pending orders. Ah. There we go. Okay, those are in. Google and Microsoft. I'm still in Forex. I've got a ton of positions. I've got like 70 open positions in Forex. I'm building on mostly Swiss pairs. So my Aussie Swiss, I'm still long. I probably made, I don't know, $20-some thousand last year on just carry trade. and I closed out my dollar Swiss positions for almost 10 grand. So I mean, I'm still in Swiss. I'm still in my or my Forex positions, but I'm a position builder. I use Forex as like a 3 to 6 month or 12-month investment vehicle where it's like I find a good trade, I take a good trade. So I've talked about this a lot. I review this stuff a lot. Why am I long Aussie Swiss? I get positive swap. We're sitting here at these like basically all-time lows. If all this does is, range, that's fine for holding, but I'm looking to see if we have a swing. So low to high, higher low to higher high, that profit is good enough for me. So that's all I'm looking for is like I'm going to hold this thing based on a swing. CAD Swiss is looking better. I got a ton of positions in here. This would allow me to be profitable on everything that I'm having for CAD Swiss. If this is a swing to symmetry and there's potentially a fifth wave, I might hold this for either profit target here or profit target here. 66 to 66.50 is a big profit level, but ideally I'd like to get to 7,000. There's a big pocket at 7,100, but it's obviously been sideways. So I'm mostly enjoying positive swap. I have dollar cost average into a ton of these, and I'm just being extremely patient, like extremely patient. But this is a monster pocket back here. We also have a major level of past support in this area. So if we can get out of this choppiness here, then I think we have a 5-wave move coming back to like 6,700. And again, I have like 30 positions open. So if I'm right, I'm going to make a lot of money. So I don't just dabble in Forex. I mean, I freaking trade Forex, but it's like I don't get in the market every single day because Forex is noisy. It's a noisy market. I don't scalp anymore. I'm mostly just a longer term trader. But my, Euro Swiss, same thing. Got a bunch of positions here on Euro Swiss. Dollar Swiss was one that paid out really nicely at 9,200, and we're trading at 90.50. So I'm just waiting. But I stacked in, 30 some trades or close to 30 trades over this window, and then closed out at 92. Initially, I wanted to go much higher than that, but because we had so many legs here, I just waited and added on trend lines and added on equal lows and ended up making like this position here was every position profitable. Okay. Do you know what percentage of your total yearly profits are? I mean, it's less than it was. I mean, I had an $8 million currency fund that now is over into it's over into stocks options, trading more stocks options, ETFs, things like that. It's just easier for easier for money management. For me, like managing money on the stock and option side is way better than managing Forex. I just say that because you got to deal with flash crashes. You got to deal with, just stupid crap that happens. Like, hey, my robots got disrupted because the broker changed the servers on me. Like I've dealt with that for years, and it's just like enough. I've had enough of it. I had too many accounts linked up where it's like one server change for my broker and my master account means I've got, 20 accounts I had to go in manually and change all these positions and update everything. It's such a huge inconvenience. I just got tired of it. So, and I can't trade with defined risk like I could in trading options. But anyway, percentage of profits. I mean, I still make really nice chunks of profit in Forex, but I mean, last year I made like 400 grand, and I would say about 30,000 was Forex ish. So it's it's just because I have a bigger pie now in stocks and options and the bigger, brokers versus just trading Forex. But look, I still love Forex. It's a pure technical market, which is why it's always near and dear to my heart. But the way I've made the most money consistently is not by day trading and not by scalping and not by over leveraging. It is by finding huge levels on huge time frames and building positions very small and building them up to a position that I'm happy with, like literally building, micro lots into mini lots into standard lots, and then taking the chunks of profit when I add to my positions and make my winners much bigger. That has helped me be very consistent for the last, probably close to 12, 13 years now. I've traded Forex since 2007. I day traded for a couple of years. I was scalping. I was, aggressive. And then I got into just much more position trading. And for the last, decade plus, it's been really consistent. So it's not easy though. And it's not for everybody. It's like most people are so impatient that, I want to swing trade. I want to trade on a 1 hour chart. Then good luck. You can make it, you can do it, but that's not my style. All right. Anyway, but I'm still in a bunch of positions on Forex trades. They're just waiting. I've just got some positions built. I'm literally long against the Swiss on everything except for Swiss. Swiss yen is not a big position. That is this trade. So I'm up a little bit on euro and Swiss yen, but this is just like a single swing trade. Everything else, I just have stacked positions in my MT4 accounts. Like I'm long Aussie Swiss, long CAD Swiss, long Euro Swiss, long Pound Swiss, long New Zealand Swiss. I'm not in dollar Swiss anymore. Also, my dollar CAD position I closed out for profit, and that was the run from 34 up to 45. So I got out of that trade for a nice little win on like 10 positions, and then I'm just going to wait. So it's mostly just hanging on to Swiss pairs right now. That's it. And I'm fine with that. Even though I have like 60 to 70 positions open, I'm fine just sitting and waiting. I get positive swap. Price isn't really doing much. I don't have to check it other than maybe spot check it here and there for the day or the week. I can check my MT4 app. I can look at my broker platform once a week. Nothing crazy. So pretty simple. To me, it's simple. But you got to have the patience to sit on trades for, 3 to 6 months and not worry about it. But that's what I'm saying. Most people don't like to do that. Most people are like, I've got 2-to-1 leverage. I'm trying to make, I'm trying to take $1,000 and turn it into $1 million. How do I do it? One bite at a time, I guess. All right. Anyway, what else do we need to talk about? It's 11:03. Let me check on my SPX positions. I just want to see if I've had some decay. I haven't hit my profit target yet. My dollar's still trading at 97. What a sticky trade today. Iron Condor would have been a good trade. So anyway, I'm just going to wait a little bit longer. Hopefully it stays around that like 60-75 zone today. Let's see here. I did oil, I did gold, I did silver. We did Bitcoin. 10-year is up a little bit today, 27.27%. The dollar's getting a little bit stronger. I mean, this has been a decent decline. More information needs to come out here, but looking at this third-party inflation gauge, we did have a nice big drop to the downside. It would be lovely to see that through February, as we get to CPI and PPI and PCE, which is usually the end of the month. Probably if it's not this week, it should be next week. So we have non-farm this week. What's next week? We actually have CPI lined up next week. Yep. So we have US CPI on the 12th, and then we should have what's this? Yep. So we have PPI, CPI next week on the 12th and 13th. That'll be another important like inflation reading. What's headline CPI, what's core CPI, blah blah blah. So we're going to get more inflation news. If this is anything that's showing some accuracy, perhaps we are going to start to see that it's printing lower. So if the market is looking at hitting all-time highs, improved inflation data might help. Okay. So just food for thought. And can this market go higher? Of course. It's almost a scary amount of optimism that's baked into the market. The Fed is likely not doing anything rate-wise. Somebody said yesterday the Fed's going to cut in March. Not from what I see. I think right now it's like the Fed would only be willing to offer a cut if we see, and I don't think a 1-month data point is going to be enough to justify the Fed cuts. Look, the Fed has already cut 100 basis points. I think the probabilities right now at the Fed are about accurate. I mean, this is designed to be a transparent tool that the Fed continues to drip this information in the market. The market's anticipating a rate cut coming in June of this year and then in December. Okay. Now, what's interesting is yesterday, I'm pretty sure I looked at this either yesterday or earlier this week, and for 2026, the market was looking at maybe one more cut, but instead there's zero. So if we cut in June, cut in December, this is looking at 0 cuts through 2026. So if the Fed gets down to, let's put them at like 3.5. 3.5 to 3.75 would be their cash rate window. As long as we see, let's say core PCE, as long as core PCE is less than, I'm going to say 2.8, okay, that's still considered pseudo-restrictive. But ideally, I'm thinking that PCE and core PCE probably wants to get less than 2.5. And I don't know if this is like the target. They're saying 2%, 2%. I mean, is this a target? Core PCE has to be 2%, or is it headline CPI? I don't know. But even if they cut rates over the next, 6 to 12 months, this is about as low as they're going right now. Now, where would the Fed cut more? Recession, right? If we saw a nasty, break in the markets and the bond markets rip higher, the equities market drops, then the Fed will probably have a plan to cut rates within a 6 to 12-month window. Would be a little bit more aggressive because rates would plummet, right? Bonds would rip higher, yields would fall off a cliff. and the Fed would have more ability to possibly cut, which again, it's a one-dimensional play that they have. It's not the best thing. I don't know how bad it gets, but in order for the Fed to be really aggressive on cutting rates, they would have to have, a recession. That we'd have to have a terrible phase in the market where things drop hard, things drop fast, and then the Fed would be willing to cut and kind of backstop and save and add liquidity to the markets. Because right now they are, cutting their balance sheet by leaps and bounds, and they are, things are rolling off the Treasury pretty aggressively. But how much longer they do it, I don't know. Like they have been slowly tightening for the last year or so, and nobody seems to say like that's a bad thing, right? Tightening means less money and less liquidity overall. And so if they end up facing some type of like headwinds and there's less money to go around, like that's just going to make the exits harder and faster, right? So anyway, that's it. I think I'll wrap it up there for today. I'm going to keep a close eye on the SPX this morning. We have non-farm payroll tomorrow morning. Hopefully today's price action is relatively calm, leading into the major catalyst tomorrow. So if it's just relatively chill today, that's fine. Non-farm, either a bump up or a bump down. This is essentially my technical outlook right now. This is SPX high. There's a high. We are making lower highs right now. Okay, is it able to get up to this level? Sure, but is this level defended again and another drop back into this trend line? Or worst case would be if the SPX breaks below 6020 or 6,000, then we're probably coming right back down to revisit. This is a deep seek low. This is our tariff low. This would just be more, more volatility to the downside. And this is the kind of buckle up approach that we talked about. If we don't have clear direction, if the market's not able to regain and eclipse all-time highs with sustained momentum, then expect some highs and lows and choppiness today. Okay. All right. That being said, I'll let you go for today. And talk to y'all soon. All right. Thanks, everybody. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.